Welcome to my channel, ICAI, and today we are going to deal with very important topic, that is inherent risk factors under AS 315. This topic is very favorite for ICAI because it forms a foundation of risk assessment and influence every audit procedures that work. Imagine that you are appointed as the auditor of ABC Technologies Limited. Before checking invoices, vouching transactions, or confirming the balances, you ask yourself one important question: where is the financial statement most likely to contain a material misstatement? This is exactly what AS 315 expects an auditor to identify. But how do we determine where the risk is higher? Answer lies in inherent risk factors. What is inherent risk factors? Inherent risk factor is a characteristic or condition that makes an assertion more susceptible to material misstatement before considering any internal controls. In simple words, we can say think of inherent risk as a natural risk attached to a transaction account. Even if a company has excellent control, certain transactions are more naturally risky because of their nature. Some accounting estimates and transactions are naturally more prone to errors than others. That's natural vulnerability is called inherent risk. AS 315 identifies 5 inherent risk factors. First is subjectivity. Subjectivity arises when management has to exercise judgment while preparing financial statements. There is no exact answer. Different people may arrive at different values. Example, ABC Limited estimates warranty liability. Management estimates 2% of products will require repairs. Another expert estimates 5%. Who is correct? There is no precise answer. It depends on the judgment. Therefore, warranty provision has high inherent risk due to subjectivity. Second, we have uncertainty. Uncertainty exists when future outcomes cannot be predicted accurately. Example, we can say ABC Limited has filed a lawsuit claiming rupees 20 crores. Will they win? Will they settle? Or will they lose? Nobody knows, right? Therefore, litigation provisions carries high inherent risk because of uncertainty. Third is complexity. Some transactions are difficult to understand or account for. Complex accounting increases the possibility of errors. Let's say an example, ABC Limited enters into foreign currency derivative contracts. Accounting involves multiple standards, fair value adjustments, and complex calculations. Even experienced accountants may make mistakes. This derivative accounting has high inherent risk of because of complexity. Then change. Whenever significant changes occur, the risk of material misstatement increases. Changes may relate to business, systems, accounting standards, regulations, or personnel. Example, ABC Limited implemented a completely new ERP software during the year. Employees are unfamiliar with this new system. Data migration errors are possible. Therefore, revenue and inventory balances become inherently risky due to change. Fifth, susceptibility to misstatement due to management bias or fraud risk factors. Some areas are easier to manipulate intentionally. Management makes flexibility in accounting. Example, management wants to show higher profits before raising funds. It deliberately oversets revenue because of 31st March. Revenue recognition becomes highly susceptible to fraud. Hence, revenue generally carries a high inherent risk. Identifying inherent risk factors, the auditor should understand why the risk exists, assess the likelihood and magnitude of possible misstatement, design further audit procedures under AS 330 to respond appropriately. The greater the inherent risk, the stronger and more persuasive the audit evidence is required. Thank you.